When you're trading in FX, okay, when you're trading in FX, it's all a leverage account. It's all a leverage account. What a leverage means is leverage gives you, the trader, the ability to have a small deposit to control a larger amount of units. Remember the word units. Okay, I'll come back to that shortly, but remember the word units. FX brokers usually usually offer leverages starting from 20 to 1 up to 400 to 1. But usually we've seen that it comes in at about 100 to 1. All right, I'll do the calculation for you shortly. But remember, as much as leverage gives you the ability to have a small deposit and control a larger amount of units, leverage also can be a double-edged sword. It not only magnifies profits, it also magnifies your losses. So if you're taking advantage of using leverage to magnify your profits, if you're on the wrong side of a trade, it could also magnify your losses. Most importantly, leverage is designed to help you take advantage or exploit the small movements in the market. So how do you calculate leverage? Imagine you have a deposit, a starting capital of $5,000, right? A starting capital of $5,000. With leverage accounts, you'll be able to manage or trade between 100,000 to 1 million units, right? We'll come back to the word units again. I'll tell you more about that shortly. Units will make a lot more sense in the next section. So we do the calculations here. 5,000 deposit capital. If you have a leverage, if the broker offers you a leverage of 1:20, you can control up to 100,000 units. If you've got a leverage of 1:50, at $5,000 deposit capital, you can control up to 250,000 units. $5,000 capital, 1 to 100, 500,000 units, 1 to 200 leverage, 1 million units. Okay, so this is the part that actually scares and confuses a lot of people, because when you start with a deposit capital of 5,000 and a leverage of, say for example, 1 to 100, you control 500 units. A lot of people think that they have $500,000, and then that panic comes around to say, what happens if I lose that $500,000? Will I have to pay the full 500,000 back? No. All right, no. The main thing about this leverage is that they leverage you up. You control 500,000 units, but your capital is only 5,000. So in a worst case scenario with a broker with negative capital protection, your worst case scenario is that you lose 5,000. Your worst case scenario is not that you lose $500,000. Your worst case scenario, if you trade horribly, you only lose $5,000 that you have put into the account. Okay, so this is one of the important points. A lot of people get scared when they trade in FX, thinking that if they put in $5,000 with a leverage of 1:100 at a 500,000, they could lose $500,000 and they will be out of pocket $500,000. They would have to repay that. That is not the case.